500 in the Nifty futures, 61 to 63 in the Bank Nifty. Different instruments, but same settlement day today, and it's the 24th of February, the big one, and a lot to trade for still today. So it's been that kind of a series where we began on news flow. We started off with that budget and then the Trump trade deal news. And yesterday again, we had a bit of news which upset the positioning of the market, and we're going to be talking about all that today. So it's been that kind of a series which has been influenced by a lot of news flow, going by the evidence of the latest piece of data with us. That is a trend which could continue through the rest of the year also, and indeed until about November, December this year. In terms of opportunity for us as derivative traders, there is a lot more to look forward to, and we spoke about this with Trump doing all the headlining for us. There's not going to be a dull market ever in markets, but it also tells us to be cautious and mindful of our risk, because not every single bit of news flow is going to be working towards our advantage. Let's come back to where we are, and I think we are poised at a very, very interesting place, especially as we come down to 25,480 in the futures, 25,500 in the spot. We've done the early part of the move, which was to test that zone. I looked to initiate a small put, but that has not gone to plan, and that's why we hastily put an exit in that 25,700 put. More on that later. I just wanted to talk to you about where we are. So the NTM wallets has been driving up via put volume, supply side volume from the open, purple above blue. Purple above blue will tell you that supply is stronger than demand, and the imbalance has been strong. We've seen the VXR go up to about 6 from the open, and that's a very strong imbalance. Some pullback is coming from call. The blue is not exactly a flat line. It's not one of those 45 degrees which can be traded with a lot more certainty than where it is. But this is still a very good imbalance, and all dominated by puts. The put side volume, either through covering or through new long put volume, and that has been the story of the morning 75 minutes of trade. So from 9:15 a.m. So only thing which was awkward in this was that this was not a clear 45, but even then this VXR hit a high of 6, and that's why this trading opportunity was there. I didn't press that put further after that, because you see this VXR didn't come back to 6 after that. So it's been dropping, and that's why you can say that the put side is not as dominant as it was in the early A period, right up to about 9:45 a.m. On my right hand side, I have a 25,500 put in market profile open, which I've kept open from the 9:15 a.m. first tick. And the reason for that is this is a very, very important instrument for us for the rest of the day. So I see this balance right after about 60. The market is currently at about 48. There was a lot of pressure put on these 25,500 put traders early in the A and in the start of B period. So price traded up above 60. Now what is the 60? The 60 is where they wrote their positions yesterday. So this is the important zone for us, and we were trading about this value. And I was watching to see if these people were covering any of that short which they did. That's why the hesitation was there. Some of them did, some of them did not, and you can track all that metric via the order flow chart. So a lot of that put writing was put under a lot of intense pressure. But if you see this green, there is still an open interest build up, and we didn't really capitalize. The put writers did not capitalize on that move down. So this is a story in itself. The 25,500 put, as a result, is holding, and they are the ones who are defending the price movement or price from going down further over here. This is of interest to me, and if this changes anytime during the course of the day, It's gone to a high of 80, and we've added 1,37,000 contracts in the A period, the period between 9:15 and 9:45. Further added about 42,000 contracts in the B period, and now in the C period, yeah, adding another 45,000 contracts. So this is the money which is holding up the march of the Nifty lower. For any reason, if this goes back above 71, 75 and goes above the value area high of yesterday, then they could be pressurized. But at the moment, it does look like 2500 PE is stable, and the pressure on that strike is releasing. Why is this 2500 important? Because yesterday at the close, if we go back to the density, expiry 24th, and if you take back yesterday's closing prices, this is where we were. Minus one sigma was at 25,500. So this strike became very, very important for us to track as we go in. One simple way to understand 25,500 minus one sigma is to see where existing inventory of the market can be put under any kind of pressure. So when it comes to minus one sigma level, they have two choices. Either they hold or they fold. That fold is in the sense they give up on the existing exposure. This minus one sigma, when price reached 2500, did not show a fold today. Did not show that 2500 put writers covering, and hence this strike became critical for us to track into settlement day. Now this is still an open settlement. Nothing is fixed. Nothing is decided for now. The pin is not yet there. There is a long time to go before the close at 3:30 p.m. Volume will keep coming into the market, and much of that incoming volume will decide the price activity of the day. So I'm very happy. Okay, some of you picked up this move, 25,700 put, but this is still a move in progress. And I believe it is my understanding that what has happened between 9:15 and 10:42 a.m. was not really predicted at the close yesterday. In the sense that the pressure which is coming has come in because of unwinding in the 25,600 put, and little bit of unwinding in the 25,550 put. Was it evident at the close at 3:30 p.m. yesterday? Absolutely not. If it was evident at the close yesterday, and it was in the price would have been at 2500 yesterday itself, not today. So the market has been caught by surprise, and there has been unwinding in the 25,600 put, which is the result of why we are at this is the put which unwound today, 25,600, and all that open interest has come down, which is the reason why we are at 25,480 today and not yesterday. I hope okay that answers a few questions about why the move has taken time today and has not happened yesterday. It's the volume which is the driver of price moves, and if price itself was the driver, we should have seen this move yesterday before close and not today. So this bit of unwinding has happened. 173,000 contracts yesterday at 51 and lower. Today it is 142, not much, but the early morning writing has come off, and some of that existing inventory is coming off in the 25,600 puts. 25,500 puts are still holding. The put writers are in the eye of the storm, and they are the ones we have to watch out for as we move further. A little bit of defense is still coming in the Nifty futures also. There is a few IB3s which have come in ever since we broke down below that 25,480. So this IB3 in itself is a message that there isn't a lot of added supply coming into the market for the rest of the session as of right now. That is at 10:42 a.m. Will it change? Of course, it can change between now and the G period, and between the G and the K period. A lot more volume will come into the market, and that volume will decide the next bit of price action in the market. So where does this fit, and how do we see this going forward? Let me quickly come to a market profile chart first, just to get a small sense of where we are. So this is the early morning A period tail, right of the value area low of yesterday. you can say that there has been an initiative supply at the open, and whenever you see such a big AP get sale, your focus should go immediately to the VWAP. The seller is in control as long as price stays below this VWAP zone. But it's one thing for the seller to be in control, it's completely different for him to keep that control. And for him to keep that control, he will have to think about initiating below the IBL, which is at 25,480 at the moment. So we will see two things for the rest of the afternoon today. We will be watching this VWAP zone, which is currently around that 25,530 mark, and we will also watch this 25,480 zone. If for some reason supply adds and we break down below, then we go down towards 25,400, which is the singles, and which incidentally is also the arrow point of the series of January. So that could be an estimated target of this auction if we decide to have a extension lower. The inference over here is if that move happens, there is added pressure on the 2500 put, and that unwinding could give that momentum which is missing in the market at the moment. So multiple plays, option volume, futures volume, all signaling the very same thing, and that is something, okay, which you need to be watching at the moment. The gamma density is at 25,500. This is the density chart, and the convexity in yellow is around it. We've seen this move from, it was 25,700 at the open. At pre-open, they adjusted positions. They moved it to 25,600, and now it is at 25,500. So what is this density picture telling you? It just tells you where the market is dense in terms of option activity. Dense as in where the maximum volume is, and that volume is currently at 25,500. And if this yellow and this orange come together, it's a projection. It's a projection of where the market is expected to close later in the day. Now, this is a dynamic number. It will keep changing as volumes come in. And you and I both know that volume can be as high as 8,000 crores every single hour. So we are not traders who go by yesterday's data. We are not traders who go by even data of 1 hour back, because data in the market keeps changing. That's why the market is alive, and it's called the beast that it is, because the data keeps updating. And if you're going by 1 hour data, or if you're going by even yesterday's data, you're about 6,000 to 8,000 crores behind the current flowing information of the market. So keep this. This is the projection 25,500 for now. Sigma is 25,350 as of 10:58, and the market feels that 25,600 is the upper flow for now. And the pressure is still on put writers as long as we stay below the volume weighted average price VWAP of the day. The Bank Nifty, for those who are trading, the market is very volatile, and I would suggest that you stick to one instrument, and whether it's Nifty, Bank Nifty, the mid cap, or whatever, you choose to one instrument and put your focus out over there. But have a look at this Bank Nifty chart and see it against what is happening in the Nifty, and you'll immediately realize there are two different beasts at work out over here. So Bank Nifty is aligned with yesterday's value area, completely in balance. The Nifty is way below value area low, and completely in control of the sellers. So different strategies, different trade mechanics out over here. So that's why choose any one of these two. But whatever you choose, go through it for the full session and stay with that focus on that instrument. It's better to be, the master of one instrument than be a jack and an expert in every single thing. That's my belief. I tend to look at Nifty futures a lot more nowadays, and it gives you that specialization, it gives you that focus, and focus is the driver of all that we do in markets today. So if you're with Bank Nifty, remember it's a balance. It's still in the value area of yesterday, and that's a market where demand and supply are matched at the moment, and that's why it's much more easier for the writer in the Bank Nifty than the writer in the Nifty futures today. So short summary again, put writers are the ones who are facing the heat. We have started the D period 10:45 a.m. look for that extension. The order flow right now. See, this is a live read which has to come to you as it is. So no doubt we have gone below 25,480 here, but I'm seeing zeros on the left hand side, and I'm seeing 103.14, 185, 129 on my right hand side. So this live reading tells me that there isn't a lot of supply in the market, even though price is probing or wanting to probe lower. So I'll be wary of initiating a long put position based on this order flow data. What I want to see is to initiate a position, I want to see an IS3, and I definitely do not want to see an RB bar. An RB bar is also telling you that no new supply is coming into the market. So at 463, there isn't a lot of supply to initiate a new put, and this is based on the reading in the order flow. So just be a little bit cautious as you trade with price levels, and you understand okay what is happening. The 25,700 P has given some excellent trades since morning, and currently there's also an IB3 forming, which is 242. So 242 would be your entry, provided you see another green in the court as we go back over here. Again, this is that zone where it is kind of iffy, and you cannot commit 100% of your size to this kind of a position because there are previous singles also at the zone 25,480. So be mindful, be watchful, and trade with the data which is there on screen, and it will tell you. If you need to initiate 242 in the 25,780 ish, stop loss would be below your IB3, 216, add 2 or 3 points for filter, which is your settlement day. So 242 does not mean 242.10. 242 would be about 245, at 216 would be about 212, 230. Make those adjustments for settlement day and work with the trade in your favor. Right? So, short summary again, we're looking for the seller to retain his control as long as we are below VWAP, and we'll see signs whether he can initiate better in the market as the day progresses. It's all to play for supply. If they keep doing a good job, the market is headed lower. But it's a settlement day and things can change. So be cautious and be on the lookout for change as it happens. So I'll switch it back to the order flow charts, guys, and if there's anything else to be added, I'll do it over the text.